All right, good afternoon, good evening, everybody. Hope you all are doing well. It is Friday. We finally made it to the end of the week, and boy, was it a crazy day on Wall Street. I mean, we had one of the largest financial catastrophes in my lifetime. So Silicon Valley Bank officially went under. Now, I have a lot to say about this whole debacle, and I'm sort of getting a weird feeling about it, especially after I've been talking to a lot of, very well-connected people in the industry, a lot of people in the startup space. So I'm getting a little bit of a weird feeling, right? We've had some interesting insider sales by the C-suite that have happened before the ominous crash of Silicon Valley Bank. So we're going to break it down. We're going to talk about it. I think the main thing that I think everybody needs to know is, this is very different than 2008, right? Because in 2008, you had a systemic crisis from insolvency. Now, looking at the Silicon Valley Bank situation, technically, the bank really wasn't insolvent, and they were kind of doing what they were supposed to be doing. It was merely an issue of not hedging for interest rate risk, right? So if you look at the balance sheet of Silicon Valley Bank, and I think people need to understand really how the banking system works here in the United States, right? We run on a fractional reserve lending system, a fractional reserve banking system, and we've talked about this before. So if you think about, when you deposit your money into a bank, technically, it's not in your account anymore, right? The bank, to leave it in layman's terms for everybody, for those of you who aren't, maybe not too read up on the situation, you would think that deposits are assets to banks, but deposits are actually liabilities, right? So if I go to deposit, $250,000 in JP Morgan Chase, that is actually a liability for the bank. And what they have to do is essentially, try to generate a yield on those deposits, because since deposits are liabilities, it costs the bank money to, manage and custody your deposits. So they lend it out through, mortgages, through small business loans and other specific products. So in this case, from the information that I have analyzed, right, and everything is very fluid as of now, it seems as if this was just a classic bank run. Now, and I'm going to say hello to everybody in the chat in a minute. Apologize if I am not too keen on reading the chats tonight. It is really nasty weather out here. If you couldn't tell, it is raining, it is windy, it's really, really nasty. But anyway, as I was saying, I think the reason why Silicon Valley Bank, in my opinion, was so prone to a bank run is because look at the depositors, right, or the share of depositors. If you think about a JP Morgan Chase or Bank of America, right, you have a very diverse depositor base, right? You have retail, you have people like me that just have a checking account, but Silicon Valley Bank was very concentrated to lending to VCs, so very sophisticated investors, in which turn invest in specific startups. So it's very easy to have a bank run situation happen, right? So maybe a founder on Twitter tweets something like, hey, you know, Silicon Valley Bank, something is not right over there. I think we should pull our money out. You know, one founder tells the next founder, and one big VC, you know, may tell their whole portfolio of, you know, startups, hey, rip your money out of Silicon Valley Bank, even though there may not be actual systemic crisis in the bank. You know, that can cause a run on the bank. So if you actually analyze what happened, okay, at Silicon Valley Bank, they just didn't have enough money to cover all of the withdrawals. And a lot of the problem stems from their large purchase of mortgage-backed securities. So I believe they purchased about $89 billion worth of MBS, right? This was back in 2021, and if this actually lines up pretty well, right? Because look at the deposit growth at Silicon Valley Bank from 2021 to 2022. Deposits absolutely ballooned during that time frame, right? Well, as we just went over, deposits are not assets to the bank. They're actually liabilities. The bank needs to find something to do with those deposits. So they either make new loans, they, you know, buy treasuries, they buy mortgage-backed securities or whatnot to try to generate yield. But here's the thing. The vast majority of that $89 or so billion worth of MBS purchases had about a 10-year maturity date at a 1.5% yield. Now, I know what you're thinking. You're probably saying, well, Tom, couldn't Silicon Valley Bank, in theory, be fine if they just hold those, you know, mortgage-backed securities to maturity? And the answer is yes. However, they are undergoing forced asset sales because if you have everybody withdrawing their cash from the bank at the same time and they don't have the liquid assets to cover those withdrawals, well, where do you turn to? You turn to your assets to force sell. And as we went over many times, real quick, we're going to head downtown, guys. This is Columbus Circle, just so you have some perspective on where we are. This is 59th Street, Columbus Circle. We're going to walk down Broadway tonight, maybe make a left on 57th Street. But if you think about how the bond market works, you know, as bond prices decline, yields go up. So there's an inverse correlation there, right? Now, the value of those mortgage-backed securities that were held by Silicon Valley Bank have declined significantly. So if you're forced to sell those assets, you're not going to get face value that you paid for them, right? You're going to get significant less value, which is just spiraling and spiraling on itself. So in theory, you know, there's been a lot of talk on Twitter. There's been a lot of talk even on the mainstream financial channels. I was watching CNBC and Bloomberg all day. In my view, I don't think this actually calls for a bailout situation. I want to know what you guys think. I think if the Federal Reserve just comes out and says, look, we're going to back all depositors, okay, you're going to back all bank deposits, that would sort of stop the bank run, would it not? And then I think everything would essentially be fine. So I think when people, you know, the people who are writing tweets and things like that about this is the next 2008 moment, it's really not. I mean, if you look at what happened, this is just a classic bank run that any bank that lives in our fractional reserve lending system is susceptible to. But Silicon Valley Bank was more prone to it because of the depositor base, right? You're talking about big VC exposure, big startup exposure. These are very sophisticated investors. And as the stream progresses, by the way, guys, I don't want to come out and say it, okay? So I'm just going to say allegedly. It seems as if somebody knew something, or even maybe there was some nefarious activity, but I'm not going to say that's conclusive, because if you look at some of the options flow here, and you look at some of the insider sales, this is 57th Street, we're looking at 432 Park Avenue, but if you look at some of the options flow here, especially put option flow activity, there was some very, very big bets okay, betting that Silicon Valley Bank stock price would decline well before this, big bank run catastrophe. And it turns out that the CEO of the bank himself actually sold over $3 million worth of stock about 3 or 4 weeks ago. Okay, now that may be just a coincidence, that may be something more significant. I think as the weekend draws out and as next week plays out, we'll get our answers. So let me say hello to everybody in the chat. Once again, I may not be able to get to everybody's comments tonight because it is raining rather hard, but I see my good friend Gary Carpenter. Welcome, Gary. Hey, Latha. Good to see you, Latha. Thank you for joining, and happy Friday to you. Will M is here. Good to see you. I see Brick Stonewall. Lex S is here. Strider 1239. Good to see you, my friend. So Strider, let me read his comment for a quick second, if I may. Says, you're right, Tom. If the Fed steps in to honor the deposits beyond the FDIC $250K insurance, everything will be fine. Well, here's the thing, right? Okay, so let's cover that we'll cover that right now. So yes, if you had $250,000 or less in deposits, that's called FDIC insured deposits. Okay, you will get your money back. You will be made whole. However, okay, and this is the key, and this goes back to my former point. Over 80% of all deposits at Silicon Valley Bank were FDIC uninsured. Okay, now that's a problem, because that means that account balances, by and large, were in excess or in surplus of $250,000. And what did we just go over, team? Oh, let me adjust my umbrella. I have one of those huge umbrellas, and it's like I'm blowing away with the wind. So anyway, Silicon Valley Bank, the vast majority of depositors had bank accounts in excess of $250,000. Now, why would that be? Well, we just got through explaining that Silicon Valley Bank really catered towards big VC firms, venture capitalists, startup founders, right? So if you're doing a big raise, you're probably banking with Silicon Valley Bank. And here's the bad thing, and we're going to get into this in a minute. What does that mean for payroll? Right? So let's say if I'm XYZ company, I don't really want to name drop companies. I just don't think that's appropriate right now. I mean, everybody could just Google the companies that are exposed to this, but let's say if you're XYZ company and you're doing all of your banking exclusive through Silicon Valley Bank, and let's say you had $17 million in deposits, well, how are you going to pay your employees come next Friday, right? $250,000 is not going to cut it. So as we talk about the ramifications of the domino effects of this, that is a big problem, okay? Because, we talk about unemployment, being 3.4% today as it stands. Well, what about all of these startups, or these VC-backed startups that employ 50 people, 50 or 60 people? Times that by 300 or 400 companies, that's a significant amount of people. And if you can't make payroll to pay these people, then what happens to maybe the credit cards these people have, or the home mortgages that these people have? They won't be able to pay them. So it's sort of like a domino effect. So that's why I was saying, if the Fed could step in here and not necessarily do a traditional bailout, but just say, look, we are going to back the deposits, that would stop a system-wide bank run, because it is very different than 2008, because there's really no toxic derivative assets here. It's just that there was a spook in the system, if you will. Hey, Toby Sanchez is here. Good to see you. Mima is here. Billy says, plus all these companies with real estate were security deposits through SVP. Michelle K, welcome. Good to see you. Billy, thank you for being here. I'm going to try to get to as many comments as possible. Yeah, Mr. Bagman says JP Morgan had a hell of a day, interestingly. Let's see who we got. Yeah, TMB says SVB could be the canary in the coal mine. We'll talk about that as well. The ABX girl is here. Good to see you. SME Media says, Tom, I am interested in what this means for other banks and consumer banks. That's a very good point. So let's talk about that. I see my good friend DM and MBA Elias. Let me try to wipe the camera lens here. We're actually outside of my favorite building of all time. This is 157. But SME Media brings up another really good point, right? So what does this mean for other banks, right? Or a contagion effect? Well, I could tell you this, and it was a very busy day for me, so I'm very, very tired. So if you could hear it in my voice, I do apologize. But, also, my brother works at a startup. He's, very good friends with the founder. And when this happened, I called him yesterday. I'm like, dude, do you guys bank with Silicon Valley Bank? He's like, yes, all of our money is there. And I'm like, damn, dude, and so that's the thing. And, the startup is pretty small. There's about, I think, 60 employees there. But that goes back to my other point. How are you going to make payroll? 60 people, even though it's a smaller company, that's significant if you extrapolate that towards all of the different depositors at Silicon Valley Bank. But, we'll get to that later. Here's where I do say that there could be potential contagion is in the regional banks. Now look at a lot of the, hold on. Let me see. I think the screen just went out. Can you guys confirm that you can see the screen? On my end, the screen went black. I don't know if we're still streaming or not. Maybe give me a thumbs up in the chat if you can see the screen. Because I could see the chat, I just can't see the screen. Oh, you guys could see it? Okay, perfect. Yeah, I guess it just went black on my end, but we'll continue to go. So I want everybody to take a look at some of the regional banks. Okay, so if you just pull up tradingview.com, if you have Bloomberg up or whatever sort of charting software you use, the regional banks did very, very poorly today. And some of the select broker dealers, like, did anybody notice the price action in Charles Schwab was down pretty big? Now, JP Morgan Chase had a pretty good day, but a lot of the very, I would say, more localized, specific regional banks were down over 20%, which may signal that there could be some exposure there. But I guess we'll have to find out later. But team, we're here on 57th Street. Check this out. The city really looks like Gotham City tonight. It's gorgeous. You have 157 and Central Park Tower in the distance. Really, really cool sight to see. Yeah, Deborah says Signature and First Republic Bank were down 20%. You're absolutely correct. So again, a lot of the regional banks were down big. Now here, we're going to be all over the place today because it's really big breaking news. So what happens? Here's my big question, right? Because we were talking about how there was a lot of, well, I shouldn't even say a lot. There was a huge amount of trading activity, obviously on Silicon Valley Bank, both in the derivatives market, so in terms of put options. So what happens to all of these short sellers who have technical, multi-million-dollar gains on paper? Because we don't know if this thing is going to trade on Monday. Now it may, but I highly, highly doubt it, since the FDIC is getting involved now. And there may be some sort of a bailout, but in my personal opinion, I don't think so. I'll give my explanation on why I don't think there'll be a bailout in a minute. But does anybody know, because we have a very diverse audience here, a very broad-based audience, does anybody know what happens to the options contracts that were taken out on Silicon Valley Bank? So for example, a lot of people have put options on the bank that expire in a week, right? So you may have a pretty large gain on paper. So I'm wondering if that just goes back to your original purchase price, or, does this thing delist, open back up on the pink sheets, and somehow there's some sort of settlement there? I don't know. That I don't know. but I'd be interested to see if anybody in the chat does know. Hey, MBALI is Silicon Valley's bank failure. It had 151 billion in uninsured deposits. Yeah, so MBALI's, that's the main concern now, right? And if you look at other banks, they don't have the same problem, and they're not very prone to these bank runs, right? Take, JP Morgan Chase, for example. You have tons of small accounts, mom and pop shops, a lot of retail people like me, and you just have regular checking accounts. But Silicon Valley Bank really catered towards these venture capitalists, towards these startups. And sometimes even in the term sheets of a lot of these venture capital firms that were investing in these early stage startups, in the term sheets, it would say you have to bank through Silicon Valley Bank. So, again, to MBALI's point, the vast majority of accounts at Silicon Valley Bank were in excess or over the $250,000 FDIC insurance, right, which poses its own risk. So a lot of the people in the VC community are very heavily connected over the internet through Twitter. So if one VC says, hey, pull your money out, we think something's going on over there at Silicon Valley Bank, that causes a panic. So technically, the balance sheet was really fine at the bank, right, at SVB. What's causing all of this craziness is that they're being forced to sell assets at extremely discounted valuations and low prices, and that is really banging them up. Again, we pointed out that they had about $89 billion in mortgage-backed security exposure. Now, yes, I'll repeat this one. Could they technically hold those to term, right? They're 10-year % interest rate, which is pretty much nothing. But they're bank run. I don't think it's the same as 2008, but this just exposes our banking system, right? We operate on a fractional reserve lending system. So whenever we deposit money in a bank, that is not an asset to the bank. That is a liability. I think a lot of people, sort of get that wrong. They think that, if a bank is taking on so much money in deposits, that's really good for the bank. Those are huge assets. No, that's actually the opposite. A deposit is a liability for a bank, right? A bank, what they do is they take your money and go lend it out to try to make money on the money, right? So in 2021 and in 2022, like we discussed, Silicon Valley Bank, their deposits absolutely ballooned, right? Because we had this huge boom in innovation. We had so much stimulus being poured into the market. A lot of VCs were raising money like crazy, and they chose Silicon Valley Bank to put their money. However, Silicon Valley Bank has to take all of those deposits and put it to work. So they bought treasuries, they bought mortgage-backed securities. So looking at the situation at face value, this is 5th Avenue and 57th Street, by the way, for those of you who are unaware. Looking at the situation at face value, they didn't really hedge well for interest rate risk, right? I mean, were you just expecting to hold all those mortgage-backed securities to maturity? I mean, that's what it seems like. Hey, Tom AK is here. Good to see you. Says, I don't trust banks anymore. TMB says it is very reminiscent of the 2007 New Century financial collapse, which at the time was supposed to be an isolated incident. Hey, Anderson says Tier 1 banks should go up due imminent consolidation and flow money. JP Morgan down yesterday. Just didn't make any sense. I'm going to try to get to as many comments as possible, guys. Hey, Action Kid says, Tom, I remember reading something before. The options will cease to exist, but the strike price of the option is where it settles. In a short sale, they will deliver the stock back at the new worthless price. Copy that. Thank you for that. EM says, I'm going to be your own bank method once it starts to make more sense. and start investing in real estate. Still learning all about that, says EM. Hey, Points Traveler, says Tom, are you missing Miami with that New York City weather? I am missing Miami a little bit. Not gonna lie, I'm missing Miami a teeny bit. The weather is not too good here, team, in New York. But the good news is on Sunday, it should be a pretty good day. So the weekend's not gonna be a full washout, but we'll see. Sunday it's supposed to clear up. We'll see. Oh, Meld, no, I didn't. I didn't check out what the traveler's check was. Chris is here from Lima, Peru. Welcome. Let me try to read as many of the comments I can. Hey, Laytha says, Walks in Wall Street. I'm hanging with the SV CEO tomorrow. I'll ask his take from the inside. Wow, really? Well, please do. Now, that's another thing, right? I think, oops. Hey, Thomas. Oh, got it. Let me see. Anyway, so we're walking down 5th Avenue here. This is 56th Street and 5th. Brad is here, says, hey, Tom. Good to see you. Anderson says, all this while the M2 money supply is contracting and going down. That's another good point. So money supply is shrinking, and for the first time in a very, very long time, which usually always precedes a recession. But we've been talking about this. We are coming off, remember, 14 years. 14 years of ZIRP, zero interest rate policy, right? And we've been sort of banging the door on this for a long, long time, that the Federal Reserve is now tightening monetary policy at the fastest pace that they've ever done it since the 80s. And when you think about the type of companies, right, the kind of companies that Silicon Valley banks, right, a lot of VCs that invest into other early stage companies, what is the main common denominator to a lot of those companies, right? And when I say this, I don't mean to be mean in any way. I'm just stating a fact for the purpose of the stream. Now, a lot of these companies are not profitable, right? And a lot of these companies will never be profitable. So if you look at the vast majority of startups, about 9 out of every 10 startups will fail, right? That is just the case. Now, a lot of these unprofitable businesses that all of these VCs were foaming at the mouth over, the financials could have worked and they could have had maybe a path to profitability, assuming interest rates stayed suppressed forever. But that's definitely not the case, right? We are going into a time and a place and an era where interest rates are going to stay a lot higher for longer, and it's going to crush a lot of these companies. So there's been a lot of talk about, should we bail out the bank? Should the Federal Reserve or should the government step in here and try to fix things? I think that would be considered crony capitalism, right? Give me 1 minute. I'm going to try to read as many chats as I can, but the weather is brutal and the wind is whipping. I can barely even talk. That would be considered to me crony capitalism. That would be considered socializing the losses, right? So it seems as if all of these bigwigs, right, all of these venture capitalists and big bankers and even some startup founders, they're okay with making money when times are good, but anytime they have to realize the loss, they cry party foul, right? So I think from that standpoint, I don't think it would be fair to bail them out. But then there's a lot of arguments on the other side, right? A lot of people are like, look, the founders of these companies really had nothing to do with this. The founders are just caught up in this crazy bank run, and it just so happened they were over concentrated to have all of their money with one bank, right? the FDIC insurance, as we've discussed here, almost to the point of ad nauseum, is only $250,000. And MBA Elias pointed out in the chat that 80% of all depositors were FDIC uninsured, which means huge amounts of money, well in excess of $250,000. So this could create a cascade effect where companies, have a hard time even making payroll. Say Cheese is here. Good to see you, my friend. Chris, welcome. Dan says Band-Aid on open wounds won't solve the problem. Michael Joseph says, so Silicon had a lot of bonds held that lost value that was caused by the Fed rate hikes. Well, that is one of the issues, right? Because technically speaking, it's not like Silicon Valley was speculating in, ultra toxic, high leverage derivative products and all this crazy stuff like that was happening in 2008. Again, what is the problem is that a lot of the assets on the book, and I always particularly revert back to the near $90 billion worth of MBS purchases because they were 10-year maturity, right? So hold them to 10 years. You get paid, per annum rate of 1.5%, and then you get the principal back at the end of that 10 years. So technically, if they held them to term, they would be fine. But they are being forced to sell them at pretty much, a quarter of the value. That is the problem. So this, in my opinion, guys, and I want to know what you guys think. I'm going to stop to read some of the comments here in a minute. This is just a classic bank run. And I'm not calling any nefarious activity or party foul or anything like that, but it's funny that the CEO of the bank sold $3 million worth of shares, okay, about 3 to 4 weeks before the bank started to go under. There's been many other short positions, huge put options in order flow in dark pool prints on Silicon Valley Bank. So is this a coordinated effort to bring down the bank? I really don't know. I don't think so. I think it's unlikely, but in 2023 we can't rule anything out. But this is what the fractional reserve lending system is. We all live in it, right? If we all went to JP Morgan Chase tonight and ripped all of our money out, that would cause a bank run. And a lot of the people who are on CNBC, Bloomberg today, were sort of pointing this out, that the Treasury or the Federal Reserve needs to come in here and sort of calm the waters, because the contagion effect that could happen, in my view, is not from toxic assets on balance sheets, but on people losing trust in the banking institution in and of itself. Does that make sense? And I've been combing over the comments a little bit. Here we have the Ferrari dealership here. I've been combing over the comments here a little bit as best I can in the rain. And many people are like, I don't trust the banks, I'm getting my money out of the banks. And that is exactly the type of thing that causes bank runs, right? People lose trust in the system. And that is a fiat system, right? A fiat monetary system, a fractional reserve banking, a fractional reserve lending system is only held up on the trust in the system in and of itself. So I think, in my opinion, the Fed or the government needs to I think the president should actually make a statement and sort of calm the waters here, because it's not about speculating in toxic assets. It's not about having bad balance sheets. It's all about trust in the system. And if somebody can make a statement, or the Fed can come out here, or the Treasury Secretary, Janet Yellen, somebody, and say, look, depositors are fine, they're going to be made whole. It doesn't necessarily mean a taxpayer bailout. I think that's going to calm a lot of people, because let's be honest, okay? Let's be honest here. How many people today, whether you are super read up on the Silicon Valley Bank story or not, have been thinking to yourself, you know what, maybe I should start to pull a little bit of cash out of the bank, and keep it just in case something else happens? I think everybody. I really think everybody. So I don't know. Team, we are now looking at 425 Park Avenue. This is a gorgeous, brand new office building right here on Park Avenue. One of the Class A properties. Really, really nice. I see Patrick New York is here. Good to see you. Mary says, so if you take your money out of the bank, how would you make monetary transactions? Not putting my money in a mattress. Yeah, I'm not saying take it. I'm not saying that. Zozo Bob's Silicon Valley Bank wasn't where Grandma's bank then. Dan says America always goes through their problems and come out stronger. I agree. NBA Elias says BlockFi had 227 million in uninsured funds at Silicon Valley Bank. I also think Roku had about 26% of cash and cash and equivalents in the bank too. I just want to ask, just respectfully, let's keep the troll comments to just a teeny minimum tonight. I really don't care if if you say funny things or just joking, but it's hard for me to read some of like the real comments when people are trolling. Just because I have one hand on the umbrella, it's hard for me to sort of read the real comments. Got yours says I have survival money. I have for disasters, but I will not be a part of the problem and withdraw money. Yeah, I mean, in my opinion, it's really, and that's what the fractional reserve lending system is. It's all based on faith and trust. All right, guys, we are now on 54th Street. Park Avenue does look beautiful here. Yeah, Mario says I used to have. Yeah, so Layla, that's correct. So if you have less than 250K in each bank account, you are FDIC insured. That is correct. So if you have $250,000 at Chase Bank and they go under, which is very unlikely, you will get your money back. It's just anything in excess of that is a no-go. Will M says that's pretty scary though. If everybody takes 15% of their deposits out to hedge, would there be widespread panic? In theory, yeah. In theory, yes. That's literally what a bank run is. And that is one of the concerns of a fractional reserve lending system that we all operate on. And I think the reason why it happened, again, not to sort of repeat myself too many times, but in my view, the reason why Silicon Valley Bank was more prone to this than other banks is because it was very, very niche in its activities, right? The vast majority of people who banked with the institution were venture capitalists, were startup founders, and these are very well-connected people, and it's a very, very small circle of influence, right? The VC community, everybody really knows one another. So if you have rumblings, and let's say if you're a VC firm and you have a portfolio of companies, and in the different term sheets, you've required your specific startups to bank with Silicon Valley Bank. Well, let's say you make a call to all those companies and say, hey, I'm hearing bad and negative things about SBV or SVB. Go ahead and pull your money out. And that is essentially what happened. If you look at the withdrawals, they were in the billions and billions and billions of dollars. I mean, nobody would have been able to cover that. And that is sort of why I keep stressing on the fact that technically there was no wrongdoing by the bank. This was just a classic bank run. And to make matters worse, in order to help cover those depositors to give them their money, they're like, look, we have to turn to sell our assets on our balance sheet. But look, one of the biggest things that we have that we purchased with depositors' money were mortgage-backed securities that have now fallen in value because interest rates have gone up so much. So it's a very strange situation. I mean, very, very wild. Welcome to 2023. Michael Joseph, good to see you, sir. Says the name Silicon Valley is a bad look for big tech and VC. Dan says we came out of 2009 fallout with the help of the government. I wonder how it will work today with inflation the way it is. Yeah, so Dan makes an interesting point, but here's what I would also like to give a thought-provoking statement here. Did we really come out of 2009 better off? Now really think about that. Did we actually come out of the great financial crisis better off, or did we just kick the can down the road, right? Because again, going back to 14 years of zero interest rate policy, what kicked off ZIRP? Well, what kicked off zero interest rate policy and having the Federal Reserve come in and stimulate the economy and provide liquidity was what technically, quote unquote, got us out of the great financial crisis. But what happens when you try to undo 14 years of quantitative easing? You're bound to break things. And to put it in perspective, we're only about a year and a half, maybe, into this QT cycle. And the Fed funds target rate, guys, is not even at 5% yet. And we're seeing things break. So, I mean, think about that for a moment. Now, there could be arguments here and there, and the situation is very fluid, that did the Federal Reserve quantitative tightening cause this bank run? I think that's up for debate, but it's definitely caused a lot of havoc in the bond market, and it's going to cause a lot of havoc for real estate investors too. But I think, this QE just really kicked the can down the road. It's either you're going to pay the price now, you're going to pay the price in a year from now, or you're going to pay the price at some point. It just depends. Hey, Arsenal fan 13 says, hey Tom and everybody, good to see you. Michael Joseph says, how common are bank runs? I think there have been a couple. Ryan says, plenty of people did not come out better off. Velocity says, 2009 equals modern monetary theory. Crap equals worse off. I definitely agree with you. Taxicab, good to see ya. Says, hey Tom, your surroundings are very good this evening. Indeed they are. I'm having a very nice walk down here. Neil Bell says, each click the like button will be worth at least 3x for the conditions such as those tonight. Thank you, Neil. Let me see if I can read some more comments. 45 says QT can't be blamed if it doesn't become systemic. Got yours says, I agree, QE is pay now or pay later, but no matter what, you'll have to pay the price. I agree. Now here's another thing, right? For all of those calling for a bailout, in terms of like some sort of a government intervention, I just don't, look, I mean, we'll see what happens. I never, in this environment, never say never, right? Never say never, but we just heard Jerome Powell's testimony, did we not? So does everybody remember last week, or earlier this week, excuse me, Fed Chair Jerome Powell, we heard his testimony. And specifically, he said that rates are going to stay higher for longer. Why? Because inflation is becoming ingrained into the economy and it's becoming very sticky. So do you think that the government is going to be willing to launch a bailout program when you have ramping inflation? Isn't that just going to add fuel to the fire? And additionally, what I'd like to add is, if you looked at futures markets today, there's actually, or I should say, the probability for a 50 basis point rate hike in 2 weeks at the next FOMC meeting actually went down significantly. It's actually, I'm not going to say likely, but there may be likely that there'll be some sort of a pause coming up at the next meeting due to this big debacle. So I don't know. I think we're in a very interesting situation here. There's been many people and many pundits calling for a premature Fed pivot due to the Silicon Valley Bank situation. But in my view, I just don't see it. I don't know. Any thoughts there? Do you think that this, I'm going to call it a situation with Silicon Valley Bank, could be a catalyst for either a pause or rate cuts? Anderson says, really hope that this event will sustain a 25 basis point for the next FOMC meeting. Yeah, so I mean, to your point, that would bring the Fed funds target rate just under 5%. B. Smith says no bailout, please. Dan says they might pivot, but it will only once again push the can down the road, and that won't correct the issue. That's a really good point. If they do that, that's just going to kick the can down the road even more. And if the Fed does pivot, what is that going to do to inflation, guys? That is going to be a rocket ride for inflation, my friend. DC says, I don't know if this bailout will happen. DC322 says, people were very angry about the bailouts with the corporations instead of the regular Joes and Janes. Yeah, so I think you can call that a moral hazard, right? Guys, look at how, just to give you a perspective on how crazy the rain is tonight, this whole sidewalk here is totally flooded out. But then again, I mean, to be fair, I think New York does need the rain, does it not? It hasn't rained in a really, really long time here. Also, it hasn't really rained in southern Florida in a while either. So I think we need the rain. We could suffer through it, but man, look at those puddles. Could you imagine if it gets below freezing in a couple hours? You know, the city will be a sheet of ice. Hey, GGNYC is here. Good to see you. But anyway, yeah, going back to that, right, that would be considered like a moral hazard, right? And to Dan's point, you know, if we think back to 2008, and I don't really like making this comparison because I don't really think it's similar at all. But if you think about it, everybody was upset. Well, why should we bail out these big bankers that were, you know, performing nefarious activities and writing horrible loans and essentially crash the financial system? If we do the same thing now, given that the vast majority of depositors at Silicon Valley Bank are these big, ultra wealthy and rich VC people, you know, from Silicon Valley that live all these extravagant lives, you know, there's going to be a lot of uproar, I think. I think there's going to be a lot of unrest because that is crony capitalism. And I think what a lot of liberals also are saying and agreeing is that, you know, a lot of corporations and a lot of entrepreneurs seem to be okay with socialism when it's socializing their own losses. And I think I would agree. As a conservative, I would agree with those people, you know, and they make a good point. They're like, oh, anytime you want to talk about, you know, healthcare for all, Medicare for all, or whatever, you know, it's always, you know, off the table. You can never do that. That's socialism. But anytime a big bank or a big company fails, oh, please, government, we need a government-funded bailout. You know, that is not capitalism. That is crony capitalism. That is corporate socialism. So I think on the principle there, I would personally be in opposition for a taxpayer-sponsored bailout, in my view. I don't think that would be fair. But it's not as easy as just saying, I'm not in favor of a bailout, because the ramifications could be huge. And that could throw a lot of people out of work. That could make a lot of people delinquent on their, you know, debt liabilities, whether it be credit cards, whether it be mortgages, car notes, and the like. So Americans need to ask themselves, are you willing to put up with that risk and bite the bullet and take the medicine now instead of, you know, firing up the money printer and kicking the can down the road? I don't know. But team, we are now looking at the beautiful, the gorgeous One Vanderbilt building. It is lit up in bright blue tonight. It looks kind of cool. You know, the backdrop almost looks like a Batman movie. It kind of looks like Gotham City here. Now, speaking of big banks, everybody, this is 270 Park Avenue. This is on the corner of East 48th Street and Park. And this is actually going to be the brand new JP Morgan Chase building. So kind of ironic that we're talking about banks. Hey, Hawaii says the FDIC is now in control. They will probably liquidate assets to try to make people whole. Right. So Hawaii makes a good point, and I think that's another thing we need to talk about. And I apologize if the stream is sort of all over the place. There's just so much news and everything is very fluid. the way this could work, right? And I've been reading a lot of articles saying, depositors should expect to get about 91% of their money back, assuming no bailout. I don't think so. And here's my position. And again, anything I say in this stream is my opinion, and things are very fluid. I may not be right, I may not be wrong. But the way this would work, right, and many people are saying, okay, well, why doesn't JP Morgan Chase, why doesn't a Goldman Sachs or somebody come in here and buy the bank? Well, rumor has it, somebody I know that I trust a lot, I put a lot of trust in him, so I'm comfortable saying this in the stream. Goldman Sachs, allegedly, from somebody I talked to that is very well connected in the finance world, was in talks, right, they didn't make an offer to buy, but they were in talks to buy Silicon Valley Bank, right, about 2 weeks ago. And that is total alleged, but from somebody I trust a lot. They didn't make an offer, they were in talks to buy them. But now if you look at it, what is it really worth, right? Because all confidence is lost in the bank. So what are you actually buying, right? So if JP Morgan Chase, if any of these other big banks, Bank of America, were to come in here and try to buy it, what are you actually buying? Right? Maybe they would be interested in the assets and it would go to distressed sales, but that's going to be for pennies on the dollar, right? So, in my understanding of the way the bankruptcy would work, the bondholders would get paid first, and then all of the liquidative, distressed asset sales would go towards paying everybody back, the depositors. But that's not going to be, in my view, nearly enough to make everybody whole. Right now, maybe it will, but I find that very, very hard to believe, after we just went through that situation explaining that, they took a huge bath on the mortgage-backed security sales. I don't know, any thoughts there? I do want to point out, this is 432 Park Avenue right here. It's almost, it's kind of a clear night. The clouds are pretty high in the sky, but I think in a couple hours here, we're not even going to be able to see the tops of some of these buildings. Hey, Dusty Cole, good to see you. Welcome, Dusty. Flat smacks is smart to get all your money out of the banks before they start. Yeah, I mean, well, that's people losing confidence in the system, right? Michael Joseph says, buy the bad debt for pennies. Yeah, I don't know. I mean, we'll see what happens. Hey, Bree Grams says, tired of the can kicking, we need innovation or innovative thinking and problem solving. Oh, Free says you worked here on the left, or the left. Oh, nice. Very nice building. Yes, Smee Media says, I hope everybody stays calm. Well, that's the thing. It's sort of like the saying, you're screaming fire in a crowded theater, right? That is essentially what a bank run is. So here's a question I have for the group. Should, and I know this goes into free speech, should prominent players in the finance industry, right? Whether you're, a partner at a bank or a VC firm or something, should you be limited to what you can say in public that may spook investors and spook depositors? That's going to be I think that question may come up in regulation. Now, many of you are thinking, no, it's free speech, freedom of speech is fundamental. But I mean, I'm not saying that's what caused this spiral and this crash, but why would everybody, I mean, just go back and do the diligence yourself. Look at the amount of volume that depositors tried to redeem. The redemptions were insane. So, and it's very funny why everybody would want to redeem their money all at the same time. Who was talking, who knew who, and that's why I'm speculating that since, if you look at the main demographic, I hope that's not what I think it is, but I think it is. If we look at the main demographic of the people who are banking with Silicon Valley Bank, it's all these big VC guys, right? It's a lot of startup founders, very connected, very smart people. I think, there was clamoring and talking, let's rip our money out of the bank because something is going to happen. Or there could have been some nefarious activity. So should there be regulation on what specific people can and can't say if they hold these big positions of power? I don't know. Michael Joseph says people are shorting stocks and releasing bad news on the internet right after shorting. Well, that's another thing. It's definitely not to, and I want to be careful with what I say because the stream is kind of growing here. It's very peculiar why the CEO of Silicon Valley Bank would sell over $3 million worth of shares just right before the bank collapses. Now, I'm not saying he's participating in nefarious activity. It's just a very big coincidence. I mean, would everybody agree? And if you look at some of the dark pool activity that has happened over the past couple days, you're talking about huge levered bets on the short side on this particular security. So I don't know. I mean, is there insider trading going on here? Did the CEO tip off his buddies who are well connected to try to make some money? I can't say that. I don't know. But I can tell you this, there's definitely going to be an investigation. I can guarantee you that there's definitely going to be an investigation. Look at the insider sales. I think you guys get the point. TMB says Congress will have a hearing on that, you'll see. Yeah, you're probably right. 45 says Tom, can regulators impose a more diverse customer base to avoid this? Well, I think there was already regulations in place as it relates to the percentage of deposits that are FDIC insured. Is that correct? Now, again, I'm not an expert in the legalese and banking laws, but I would assume, and it's never appropriate to assume, and maybe some other people could chime in here. We do have a lot of, smart folks here. I think there's already regulations as it relates to, percentage of deposits that have to be covered by FDIC. Everybody, we are now coming up to the beautiful Grand Central Station. To your right, this is the Yale Club. This is another really beautiful building here in New York City. Really gorgeous. Now, I've never been inside the Yale Club, but from what I hear, it is really beautiful. I think one of my favorite things about New York in general, and I've said this many times, is all of the, I would say, diversity in architecture, right? You could be on 57th Street where we just were, where you have these massive, brand new, Billionaires Row style buildings with all glass and, even this one, right? Even One Vanderbilt, it's sort of like that kind of Billionaire Row style building too. But then you also have these older, timeless buildings that sort of look like the inside of the New York Public Library. It's really nice. Got yours. Is there are liquid requirements or liquidity requirements that are watched like a hawk, but it's never enough on a run? Yeah, that's true. Yeah, this was just like a classic, really egregious bank run. Yeah, hey, photos from around New York. Good to see you, man. This is Campbell Apartments are coming up. Yeah, we actually may take a walk through Grand Central just so I can get out of the rain. MBA Elias is, what does the collapse of SVB means for venture debt? Well, that's one of the things I'm concerned about. So now many people are saying that this could, I'm blanking on the name of the gentleman, but if you look at my Twitter page, everybody, if you go to Twitter and you follow @WalksWallStreet, there was a really interesting, it was the CEO of Y Combinator. I just am blanking on his name. But the CEO of Y Combinator said, if somebody doesn't step in here and bail this out, innovation is going to be killed and crushed, and you're going to have like an innovation winter he was talking about. right? Which I guess makes sense, but in my view, you know, I think he's just trying to protect his book and sort of draw urgency from the regulators and the Fed to try to nip this in the butt before it gets any worse, right? Because he has a vested interest in doing so. But I mean, the thing is this, like, if these companies lose all of their deposits, you know, how are you going to pay your payroll? And especially some of the biotech startups, right? Because as we talked about biotech, and this is actually one of the reasons why very, very seldom I will actually buy and speculate on biotech stocks, specifically newer issues, because their revenue streams are usually very dependent on a specific drug, right? So if you think about, let me try to wipe the screen here. I think I actually just made it worse. Hold on. If you think about, you know, like a startup biotech, you know, they are totally dependent on VC money, or, you know, getting money from investors so they can, you know, invest in this drug and do R&D. Hold on, let me, I gotta wipe this. Give me 1 minute. All right, that should make it better, right? All right, you know what, let's take a break, let's go inside because I'm soaking wet here. And then we could have a better conversation. Whew. Now, what I'm trying to make a point about these biotech companies, you know, these companies could go to zero overnight if their particular drug is not approved by, you know, the FDA. If they don't get FDA approval, you know, they're very based on one specific income stream. It's not like a SaaS company where you're selling a piece of software on a reoccurring revenue model, right? It's not the same. So I think a lot of smaller companies in the biotech sector that are startups, I mean, if they don't have access to their deposits, they have no revenue coming in, right? At least with some of these other SaaS companies, at least they have some receivables coming in, right? Some new money coming in every month to ring the register to maybe have them try to stay afloat. But these biotech companies, they literally are pre-revenue. Some of these companies are pre-revenue. So I don't know. I really don't know. It's kind of scary to think about, but hopefully everything will work itself out. Here's another thing to think about. Let's say if you're a VC firm looking to raise money now. I think that's probably going to be almost impossible. Got yours as I only day trade the biotech sector. Oh, okay, cool. Very nice. Congratulations on your success. Karina Thompson is here. Welcome, Karina. We are in Grand Central Terminal, one of my favorite places. Sabrina Farah, good to see you. Jafet Perez. Photos from around New York says we could probably go all the way down to the LIRR. You know, let's actually try that. So for those of you who don't know, Photos from around New York brings up a really good point. The East Side Access Project is officially open. So that means if you live on Long Island, you can actually take the Long Island Railroad to Grand Central Station. Now, I think we have to make a right here and go down these stairs. You can see Long Island Railroad right here. So let's see if we could see it. I've actually yet to take it, so we'll see. But yeah, I don't know. I think we covered the Silicon Valley Bank thing pretty well. I think next we'll start to talk about technicals in the market because I think this could potentially be the event, right? The black swan event that finally forces this big liquidation in stocks to finally make us enter a bottom here. Here we go, guys. So team, check this out. So this is the Long Island Railroad. I'm not too sure how good the internet is going to be, but let's check it out. This is going to be Grand Central Madison. So this is the Madison Avenue Concourse, and supposedly it's gorgeous down here. I think the city did a great job. Definitely took long enough and cost a lot of money. So let's see what it looks like. Hopefully the internet holds up. This is Grand Central Madison. This is actually my first time being here, so I'm going to enjoy it with all of you live on the stream. Kind of looks like you're walking through a prison. I think they could have done a little bit better job on this, but maybe this is just temporary, the doors. Let me know if it starts buffering. We'll see if the internet holds up or not. Kind of looks cool. I like it so far. Oh, Dylan's office is probably temporary. I think you're right. Well, the walkway looks kind of cool, right? They are showcasing different art pieces. Let me try to give you guys a look on the other side. You know, and it's clean too. It's actually really nice. Hey Cosmo, what's up, man? Cosmo Scary says this is what $11 billion gets us in New York. Hilarious. Well, I think as we walk down this hallway, maybe it's, I guess, maybe going to get a little bit more impressive on the eyes, I guess. I'm very impressed how well the LTE access is holding up. This is going to be awesome for me, guys. I mean, you guys know me. I usually work, more towards the east side, so it's definitely going to be better than going all the way to Penn Station and taking the train and then transferring. I think this is going to be good. Okay, Grand Central Madison. It is very clean, looks nice. Now, when we get out of here, we're going to talk about some technical, major technical breaks that happened today. Obviously, all of the major equity indices got hammered, well below their 200-day moving averages and 50-day moving average. So I think we're going to see some potential big liquidity shocks in the market. And when you have those liquidity shocks, you have big mispricing, sort of like what you saw during COVID. And in 2018, when you had that big sell-off in the Christmas Eve. So we'll talk about that in a minute. But guys, look at this. This is going to be cool. So there's a lot of vacant space here, but obviously because this is pretty new. So it looks like there's going to be restaurants, bars, a lot of cool stuff in here, but this is not even the main terminal. This is just the ticketing section. So you could buy your tickets to the Long Island Railroad, as you can see, to ticketing and customer service. Let's walk down a little bit more, but I guess this is the main area to the tracks. So you see Long Island Railroad, you can go down to tracks 201 to tracks 304. We'll do that in a moment, but since we're here, we'll just walk to the end of the concourse and see, if anything is over here. This is my first time being down here, so you and I are exploring this together for the first time. Pretty impressed so far. Everything looks clean. Hey, Richard Vogel, good to see you. Yeah, I'm not seeing many homeless people down here. At least not yet. Yeah, Dan says Friday night in New York City is crowded. Here's another thing, guys. Hey, the Papa Smurf OG, what's up, man? Good to see you. God bless the FDNY. Here's another thing my friend texted me this today. He's like, with the Silicon Valley Bank exploding and potentially sparking another financial crisis, things are booming. In New York City, guys, I mean, every single coffee shop, every single, restaurant is packed. You would never know that we're going through a banking crisis if you walk down the streets of New York today. Just thought that was kind of funny. So this looks like the main ticketing area here. Yeah, Joseph Hardaway says at least not yet. I really think this is the catalyst that's gonna set off some big mispricing events, and I think there's gonna be a lot of opportunity, especially if we have another round of big layoffs, which I think we are. Did anybody see breaking news out of the Wall Street Journal today that Meta is actually announcing another layoff that's just as big, if not bigger, than the first round of last year that they did? So, you know, a lot of people are going to be thrown out of work, and that means they're not going to have income to meet their debt obligations. So that's definitely going to be something to worry about. Okay, guys, check this out. This is the brand new ticketing concourse here at the Long Island Railroad. Everything looks really nice. It looks state of the art. These boards up top, for those of you who don't know, that is where they tell you which track to go to, right? So you have the Huntington line, you have the Babylon line, Floral Park. I don't see Long Beach, which is the line that I would get. Maybe you could just transfer at Jamaica Station, but it seems like the main lines that go out of here is Huntington, Babylon, and Ronkonkoma. Probably because those are the most traveled. But it looks good. Looks good. Not a lot of people using it though, but it definitely does look good. All right, we'll walk a little bit further down here just to see what this is, and then we'll head down the escalator. I'm seeing a lot of comments in the chat that it's a minute escalator ride. Oh my God. We'll see. We'll see what happens there. Okay, so this is 47th Street Madison Concourse. So maybe this is the main escalator, I'm assuming. Yeah, this looks like the main escalator to go down.
Once again, the 1005 Ronkonkoma train is now boarding on track 204. The elevators, escalators, and stairs.
Photos from around New York says a minute and 30-second escalator ride. We might as well do it. It looks like the LTE coverage is pretty good down here. I'm not gonna lie, I'm pretty impressed so far. Looks good. Now, I don't know how these will do, right? So imagine if you're a tenant down here. There's not a lot of foot traffic here, right? And this is a Friday night. There's usually lots of foot traffic, so I don't know how the businesses are gonna do if they, choose to set up shop and rent places down here. Doesn't seem like there's much foot traffic. I don't know. We'll see. We'll see. Hey, Silos is very impressive. Good to see you. Marcelo Gills is clean and noiseless. Indeed. Hey, the ABX girls, as if tech jobs, layoffs, will real estate in New York City drop? Yeah, I mean, that's the biggest concern, and I think that's the big concern for some founders. Now, there are some rumors, and I've seen it before, where founders use some of the money or some of the equity, they borrow against their equity to take out mortgages to buy homes. I mean, this could unwind pretty quickly. I mean, you never know how fast the Contagion event could happen, but this is exactly what we talked about, right? So, for those of you who are new here, we've been talking about, okay, interest rates have gone up, home sales have ground to a halt, but we have not seen prices catch up to the interest rate environment, right? And we've been speculating here on Walks on Wall Street that we need a catalyst. What is going to be that catalyst that explodes unemployment? I think we may have found it today, but we'll see. Hey, the Mighty Bull, good to see you. Thank you so much for your very kind and generous $5 donation. Appreciate you very, very much. All right, let's check out the downstairs. So it's going to be a minute and 30-second escalator ride. We'll see if the internet holds up. I hope it does because, I hope it does. All right, here we go. Minute. Oh, maybe there's multiple sets of escalators. I thought I was just going to be looking down like a huge thing. We'll see. But yeah, I mean, if you look at sales transactions, totally fallen off a cliff, like absolutely obliterated. Existing home sales have declined now for 12 straight months, and we're just starting to see prices come down. But the main thing that's going to bring these prices down, everybody, is inventory coming onto the market. And generally speaking, you need a catalyst to bring inventory on the market, which is either builders flooding the market with homes or people defaulting and they can't pay their bills. So maybe this will be a catalyst, perhaps. So maybe we'll get to capitalize on some distressed asset sales, but we'll see. Wow, this looks good, guys. This looks really, really good. I feel like I'm in a video game. Does anybody feel like we're in a video game right now? Now, does anybody want to guess what this is very reminiscent of? This is very reminiscent here of the Whisper Wall in the original Grand Central Terminal. So I think they tried to keep the architectural nuances similar to the old station, but it obviously looks a little bit more modern, but you can kind of get those same hints of the old Grand Central Terminal, can you not? It kind of looks similar. If anybody's been down on the lower level concourse at Grand Central Terminal, this kind of is reminiscent of the Whisper Wall, maybe a little bit of a futuristic twist. MBA Elias is eventually the SVB collapse will affect us all in one way or another. I do agree with that. One way or another it is. And, if it is going to affect us, it's going to affect the markets where there was a big tech boom, right? So obviously Silicon Valley, but Austin, Texas, and some of the new up-and-coming cities like, Miami and things like that. If this thing really unwinds and gets as bad as we think it's going to be, I think those particular markets may be in trouble. All right, I'll give you guys a little bit of a panoramic view here. Let's check out the actual tracks. So all people in New York are funny and get funnier as they get older. This is what that says. Would you guys agree with that? All people in New York are funnier and get funnier as they get older.
Please stand clear to closing doors.
Interesting.
On track 204. All aboard track 204. All aboard track 204.
I think this is Jerry Seinfeld quote. Wow, this doesn't even look like New York. So that is where you get the Long Island Railroad, pulls up right here. This is really beautiful. They did a great job.
Now boarding on track 302. Customers exiting on Forest Hills must board the first 6 cars of the train.
Let me go down and show you guys the track. I want to see it for myself. I'm going to be taking this a lot. So we'll be able to show you guys the actual platform here. Now, if you guys are enjoying the live stream so far, feel free to leave a like on the video, click the subscribe button if you're new, and share the show with your friends. We usually go live about 5 days per week between New York City and Miami. We'd love to have you guys a part of the team. All right, so this is track 303. Now, for all of my New Yorkers here, look at how freaking clean the track is. Is that not just the cleanest track you've ever seen? Now, usually when you're taking the subway in New York, this is filled with rats, it's filled with, all types of stuff, garbage, urine, you name it, it's filled with it. And I guess this is actually what the tracks are supposed to look like. They are clean, my friends. Dang, this is pretty impressive. Now, the question is, how long is it going to stay like this? Hopefully for a long time. But this is fantastic. I give it 2 thumbs up. Let's go down here and see what the area of refuge is. Yeah, 45, it does smell like new construction. It's really nice. They did a really good job. Oh, this is cool. Maybe this is like an area for handicapped individuals to hang out, wait for the train, perhaps. I'm really, really impressed. And I'm not just saying that. Very impressed. I'm so glad I came down here. Thank you, Photos from Around New York, for the recommendation.
Time is 10 on.
And I'm very impressed with the internet connectivity down here too. I think we're, like, guys, we are extremely far underground here in New York. Extremely far underground. So for the internet to be holding up, that's ridiculous. Melissa says, I just tuned in. Where are we? This is the brand new Grand Central Madison. So this is the East Side Access Project, where you can get the Long Island Railroad. And I'm going to be spending a lot of time down here. This is actually my first time being here. It's kind of cool to explore with all of you, but this is awesome. They did a great job. Billions and billions of dollars, and years and years and years later, we finally got this. Now, could you guys imagine if every single subway station in Manhattan looked like this? I mean, that's what's so difficult about New York. It's such an old city. The infrastructure is so old here that it's so hard to make it clean, right? It's so hard because things are so old, and it's going to cost so much money to rip and replace. But if you're a new city, right, think about this. If you're a new up-and-coming city, it's actually a little bit easier because you're just building new infrastructure like this. Like, imagine if all cities looked like this. This would be incredible. Yeah, Cosmo, you're right. 34th Street, Hudson Yards, the 7 train subway station kind of does look like this. But again, that's new, right? That's basically 100% new infrastructure, right? Like, Times Square and all the other locations, they were built years and years and years ago. But anytime they extend it, obviously it's brand new. All right, let's head back up. Oh, and it looks like the vending machines are going to be here to buy your tickets. But here's a little bit of a tip for anybody who's going to take the Long Island Railroad. Just download the application. You could buy the tickets on your phone. You don't need to buy the physical tickets. Hey Nina, good to see you. This is Tom. Southern California definitely needs new train stations. Some of them are over 100 years old. I mean, that's the problem with the United States infrastructure in general, right? Pretty old infrastructure. So it looks like this is the Ronkonkoma train that's actually pulling out of the station now. So for those of you who don't know what the Long Island Railroad trains look like, this is it. So this is what I ride home on every night, for those of you guys who are curious. So when the stream ends, that is where I go. Hey, Steve Buffalo, what's up, man? Says thanks for showing us Grand Central Madison. Hey, I'm excited to be here too. It's my first time being here. Now I'll show you guys the board, right? So you see Far Rockaway, Floral Park, Port Washington, Huntington, Ronkonkoma, and Babylon. I usually take the Babylon line, but now mostly I take Long Beach. So Babylon, you have Jamaica, and then it goes Rockville Center, Baldwin, Freeport, Belmore, Wantagh, Seaford, Massapequa Park, Amityville, Copeg, Lindenhurst, and Babylon. And then at Babylon you could change for the train to go all the way out east to the Hamptons too. If you take the train enough, you memorize all the stops. So here's another view looking straight north of the escalators. Now I would say probably in a couple months here, some of these escalators are going to break. People are going to be getting some pretty good exercise walking all the way up. Hey, Fun Feeds, good to see you. Says I have family in Babylon, love that. Sally is here, welcome. Mike C says, well, we had that infrastructure bill pass. I'm sure everywhere will look like this soon. That's true. We had a $1 trillion infrastructure bill pass. Now that's another thing. I told you guys I met with a pretty well-known property developer, a real estate developer. I won't give out his name, but we had a pretty good conversation about commercial real estate in New York, residential real estate, and also multifamily real estate. And obviously, interest rates was a big part of the conversation, but he said something really interesting. I think I forgot to mention this yesterday. And even though we're going through quantitative tightening, right, by the Federal Reserve, from the fiscal side of the house, it's almost a little bit of a stimulus that's going to be coming down the pike from this infrastructure bill. And he told me, he's like, think for yourself, like, why would a government want to spend and pass these huge spending bills as it relates to infrastructure? And I looked at him and I said, I don't know, tell me, like, why? And he said, because they create a ton of jobs, right? So if you're going to spend money on infrastructure, like building something like this, right, it's going to take a ton of people. You need to hire a ton of people, and it's going to take multiple years to build things like this. So that is why governments, maybe we'll go this way. I think this is the way we came from. So that is why governments generally like to go pedal to the metal on these big infrastructure bills, because they're big job creators. They keep people employed. Oh, that's actually my train conductor to Long Beach, this guy right here. That guy's actually pretty funny. He's a little bit of a grumpy guy, grouchy. He always, before when you board the train, he always says, "As the Long Island Railroad, Long Beach train, we only accept tickets on this train. We don't accept any stories." Because, people will go on the train and they'll say, "Oh, I don't have a ticket. I lost it. I do this." So he always hammers the people. He's like, "This train, we only accept tickets. No stories. No story time. We don't accept stories." He's like, "If you want to hear a story, go home to your mother." And that's true. Anyway, I'll stop rambling. He usually goes out of Penn Station though. I don't know why he's here. Man, this is a long walkway though. All right, let's head back. The bathrooms are probably really nice too.
Grand Central, north of Madison, Florida.
That's true. This is probably his new post because he has seniority. Yeah, usually in the LIRR, right, union jobs, it goes based upon seniority. I was actually in a union once. I'm not sure if you guys know this. I think I told you the story. I was in Local 1101, which is the Communication Workers of America, CWA. And I will say this about unions. You learn a lot, right? That you go through pretty good training. In my case, I did a lot of network training for like telecom networks, a lot of sales training, and it's really good stuff. But yeah, unions are all about seniority. So I had the worst work hours. Pretty much I could never take a day off because it would never get approved. Yeah, MBA lies, that's also true. There's no like airport people mover, right? You would think that they would install one of the sort of like the escalators on the floor, I guess the people movers they're called. Because this is a long walk. I mean, That's a good point.
The train.
They should have installed them. All right, now we are back to the old Grand Central Station. Zach Drew says, Tom, the UK delayed their high-speed rail again. Water blazing. Yeah, 10. It was definitely a lot of walking. I could notice it already. Hey, Paul says, Tom, I'll be in Manhattan in December for a concert. Any good recommendations for hotels near MSG? Well, I'm going to give you a tip, okay? In my personal opinion, and this is, look, I don't, you guys know me, I'm very honest. I would try to avoid staying at a hotel in and around MSG. That's just my opinion. But if you want to look at a hotel near Madison Square Garden, I think it's called well, I forget the name, but it may be a Holiday Inn or it may be something else, but it's right across the street, and I'm talking about literally right across the street from the brand new Moynihan Train Hall. I've stayed in that hotel before. It's very clean, it's very nice, but I'm blanking on the name. If you go on Google Maps and you look at, 33rd Street and 8th Avenue, it's right as you enter that main Long Island Railroad terminal. But here's why I say don't stay in a hotel around 34th Street. Unfortunately, let me give you guys a good shot of the ceiling. You can see the mighty bowl right there. Unfortunately, in and around 34th Street, especially 7th and 8th Avenue, guys, it's a lot of homeless, a lot of drug problems, like a ton of drug problems there. And I don't know, if I'm traveling, if it were me and my family, I don't know if I'd stay in that area. I'd avoid, so here's my perimeter, okay? This is where I usually avoid. And I can't really avoid it because I pretty much live at Penn Station. But avoid 34th Street to pretty much to 42nd Street between 8th, 7th and 8th Avenues.
So
Hey.
yes. Hi, how you doing?
Hi.
We're wondering, like, what do you, oh, hey, how you doing?
Oh, hey, good to see you. What happened? Oh, are you lost or something?
We are. Are you lost?
Yeah, I'm just walking around.
We are as well.
Oh, very nice. Well, enjoy your Friday. Yeah.
Enjoy your Saturday.
Oh, thank you so much. Yeah, I would avoid 34th Street to about 42nd Street between 7th and 8th Avenues. A lot of drugs, a lot of stuff. No, I don't think. Someone just grabbed me from behind. I think they were just, I think they were a little drunk. I don't know. I don't think they knew about the stream. But yeah, generally speaking, Midtown near 34th Street, especially 8th Avenue, all the way up to, I would say, the Port Authority bus terminal is not the best. Let's just say that. Not the best. But if you need a place in and around 34th Street, that's the only hotel there I've stayed at. So right there, I think 33rd Street and 8th. It's brand new too. All right, let's head out. Oh, it's actually not that bad. The rain was supposed to pick up. It looks like the rain actually stopped a little bit. Well, that was awesome. I give it 2 thumbs up. I give it a 9 out of 10. The Grand Central Madison, brand new, super clean, really awesome job. So kudos to all of our friends over at the MTA. They did a phenomenal job on Grand Central Madison. I'll give you guys a quick look of the outside of Grand Central Station. Wow, look at that shot. I think that's the shot of the night. You see the beautiful Chrysler building. As we talk about Art Deco buildings, this is probably the best one in the city aside from the beautiful Empire State Building. Now, you'll notice across the street Charles Schwab. Now, for whatever reason, right, I don't know if there's any counterparty risk, I don't know if there's any contagion, but it was very interesting why Charles Schwab was down almost 20% today. I mean, obviously it's concerning. All the bank stocks were rattled, but Charles Schwab specifically was hit very hard, which is, not gonna lie, it's concerning. You know, I'll just leave that there, but you know, we spent the first hour of the stream doing an in-depth dive on the Silicon Valley Bank situation, so we'll see. In the distance you have Salesforce Tower. Hey, Grand Street 1 is that view of the Chrysler building. Will soon be blocked by a huge new skyscraper. No way, really? Hold on. Oh, you know why? So are you saying that the Hyatt, right? So this is the Grand Central Station Hyatt Hotel. Are you saying that's gonna be torn down and there's gonna be like a super tall skyscraper there? You know, if that happens, I'd actually be really surprised because I would assume there would be a big fight over the air rights on that building. Let's actually check it out. Now, for those of you unaware, sometimes developers have to purchase air rights, which is essentially space above the plot of land, so they can approve or they can get approval to build the buildings that tall. But the building with the sort of a luminous glow on it is the Hyatt. So I don't know, are they going to tear down the Hyatt? Hopefully not. This is a pretty cool view too. All the traffic. Hey, Dan Zhang, what's up? Says, hey Tom, thanks for doing the stream in the rain. No problem. Dan, we just checked out Grand Central Madison. We talked about Silicon Valley Bank. We talked about, you know, the run on the bank and what really caused it. And, you know, I think everybody's just on a hiatus waiting for tomorrow, or excuse me, waiting for Monday to see what happens. Now, let's quickly cover a technical aspect of the market. Now, does anybody remember we had a conversation about, usually, you know, if you look at a long-term chart of the S&P 500, okay, if you have TradingView, if you have MarketSmith, if you have a Bloomberg terminal, wherever you chart, look at a monthly view of the S&P 500. And usually, the S&P 500 has these very sharp V bottoms, right? It did that in 2020, it did that in 2018, it did that during the Great Financial Crisis, and it did that after the tech and telecom bust. We have yet to have that, and we've been talking about how the sell-off in the market has been very structured, orderly, and systematic in nature. So if we go all the way back, usually the very high beta, unprofitable growth stocks will be the first ones to decline when interest rates start to go up. That happened. Then it's the mid caps, and then they come after the generals, which is, you know, your mega cap tech stocks. So is Silicon Valley Bank the black swan event, or the common denominator, that is now going to set off this chain reaction and mass liquidation phase in the market, where the S&P 500 can get really, really accelerated to the downside? I think that may happen. You know, if I had to bet, I think the S&P 500 will break the October lows. You know, if this situation with Silvergate and Silicon Valley Bank is really as bad as it seems, I believe that the market is going to break the October lows, and I think you're going to have, I would say, mispricing opportunities maybe in 2 to 3 years, or maybe even sooner, in some distressed assets like real estate. Now, my biggest concern with that, real quick, this is the New York Public Library. The Stephen Schwarzman building looks beautiful today. Now, the big problem, and I think it's important for us to quickly review this once again. We talked about it before, but in 2021 leading up to 2022, there were some real estate syndicates, there were some REITs, and some, private investors with deep pockets that were purchasing multifamily real estate, okay? So think about very large apartment complexes, over 150 units, all the way to like 350 units, right? They were purchasing these properties on floating rate debt, right? Now, the people who are responsible would use fixed rate debt, right? However, you can get yourself in big trouble by using floating rate debt. And it just so happened that not everybody, but a lot of investors used floating rate debt to acquire these big multifamily properties. Now, interest rates have moved significantly, 100% move in rates, and the rents are not enough to cover your overhead on the mortgage. So a lot of people would think, and this was their thesis, that, interest rates are really low. We don't think they're going to go up that high. And even if they do go up, by, 50 basis points, we are able to raise the rents and have that pricing power and raise the rents on our tenants in order to, cover the higher interest payments. Well, I think there was just a big curveball thrown into that thesis. A lot of these mortgages now are being re-rated at higher rates, and if this Silicon Valley Bank thing is really as bad as it seems, you're going to have so many more layoffs, okay? Like, you haven't even seen the beginning of it yet. I mean, the unemployment rate is at 3.4%, okay? The lowest level in years, in decades, 3.4%. If we start to see layoffs accelerate and your landlord says, hey, I'm going to raise your rent by $500, people are not going to be able to put up with that. People are going to be forced to move out. If anything, I think rents could go down and decline. So this may be a pretty interesting situation, and some of those assets may go back to the banks in a year or two. I don't know. That's what I think may happen. And the people who are well capitalized may be able to pick up those specific properties for a very significant discount. We'll see. Everybody, we are walking towards Times Square. You can see that's actually where they dropped the ball on New Year's Eve. Kind of looks cool. MBA Elias, as many people invested in ETFs for the big bank stocks and unknowingly bought SVP into your portfolio. Well, I think Silicon Valley Bank is included in the S&P 500. And I was reading a Bloomberg article, and I think there's going to be some forced selling there, and obviously some other companies going to have to take its place. But correct me if I'm wrong, I think Silicon Valley Bank is within the S&P. Is it not? Okay, Bryant Park Salesforce Tower. Now, I said this before a couple minutes ago, but Meta, okay, Mark Zuckerberg's company, announced again, this is breaking news, guys, today, that they are going to launch a layoff event that is as big, if not bigger, than the one they did last year. Top G says PODD is taking its place in the S&P 500. Thank you for that. I did not know that. Nina says, Tom, unemployment, in my opinion, is going much higher. Government is not telling us. Hold on, I'm just trying to read some of the comments. Michael Joseph says they are removing it from the S&P 500 Monday. What else we got? Yogi, good to see you. Got yours. Is similar excuses people made about negative AM and interest-only loans in 2004 to 2008, that even if rates get bad, they had enough equity or they could refi their way out of the mess. Yeah, exactly, and that's definitely not the case. All right, let's cross here. So I don't know, looking at it from a technical perspective, guys, you know, S&P 500 now closed well below the 200-day. The Dow Jones Industrial Average closed below the 200-day, and the NASDAQ closed below the 200-day. So that's risk off. So not only are you going to have a lot of algorithms selling, you're going to have a lot of intermediate-term trend traders selling this market too. Wow, guys, check that out. Is that not the coolest shot you've ever seen in your life? Look at that. The S&P 500, I mean, oh my God, the S&P 500. The Empire State Building is lit up in this really interesting pinkish color. Yeah, look at that. Wow, that is awesome. Look at the steam coming off the top of that too. That is really, really cool. Hey, Dusty Cole, what's up? Good to see you. All right, we'll walk up a couple blocks. Michael says, Tom, how you doing? What's your take on solar panels? Well, here's the thing. I think there's a lot of people in the chat that may be a little bit more knowledgeable than this than I. But from a lot of people that I've been hearing that quote solar panels on their homes, the payback isn't worth it. Now, does anybody here in the chat have solar panels on their house? And can you say it's conclusively worth it or not? But for a lot of people that I've been talking to, they run the numbers and they say it's not worth it. But again, I don't know. I've never done the analysis on it or not. But I will tell you this. If I run the numbers and it makes sense to put solar panels on my house, yeah, of course I would do it. But here's the thing. I think I told you guys this already. My electric bill is only like 50 bucks. I don't know what's going on. I don't know if it's wrong. But the electric bill in Florida is so cheap. I don't know why. But I don't know, we'll see. Let me give you guys another view of the Empire. Wow, Nina says I installed solar panels and I'm not happy. Oh wow, Jimmy says, Tom, it's lit up for a K-pop group. Very cool. Oh, somebody says it lit up in honor of Queen Elizabeth II. I don't know. I have no idea. I can never figure out why it's lit up. Yeah, NBA Elias says Bill Ackman says the government should consider a bailout for Silicon Valley Bank. So I did see, so gold, what was I going to say? Bill Ackman did tweet that, not today, but yesterday. And I responded and I'm like, and look, I respect Bill Ackman a lot. I think you guys know that. I talk very, very highly of Bill Ackman on the stream all the time. I think he's a great guy. I learned a lot from him. But I don't think we could run the risk of, you know, repeating the same mistakes as we made, you know, during the great financial crisis. You know, why is it that, you know, if we want to live in a capitalistic society, right? You know, we either have to or we can't. But what we can't do is we can't socialize the losses for people who are generally well off, right? Because that's just not fair to everybody else. Now, I get it. You know, you could say, well, Tom, if the bank goes under, you know, there's a lot of startups that, you know, had nothing to do with this situation, and they're not going to be able to make payroll, and they're going to go out of business. I get that, but in sort of a harsh reality in capitalism, you take a risk, right? You know, some people may be like, well, Tom, these VCs didn't do anything wrong. They just had their money with the wrong bank. Well, I mean, in capitalism, you take a risk, right? And it really pains me to say that, but if not, it's going to create an environment where people will say, wow, regardless of what I do, I'm just going to get bailed out by the government. So I'm going to take egregious risk and do whatever I want, because if I'm wrong, I could just go cry to the government and I could use taxpayer dollars to save me. So it's a tough situation. I think that the private market should figure it out on their own. And I think all these venture capital guys, right? I think a lot of private investors, if they want to bail it out, you bail it out, right? I really don't think it's appropriate, because you could use the same argument, right? You could say, hey, you know, the guy who's, you know, working as a truck driver, the guy who's working as an HVAC mechanic, or the guy who's working, you know, in anything, right? They didn't have anything to do with it either. So why should they foot the bill, right? So it's tough. I don't think the first conclusion that every crisis should be government bailout, government bailout, government bailout. That's crony capitalism, that's corporate socialism, that's privatizing the gains and socializing the losses. I don't think that's healthy for the public. I just don't. I don't. All right, guys, here we are in Times Square. You know, when it rains, I actually think Times Square looks rather beautiful. With all the city lights reflecting off the ground, I think it looks pretty good. Hey, Michael says, hey Tom, my solar panels have been causing roof leaks. No way. It is a very big headache. Really? Jeez. Well, hopefully that gets fixed, man. I mean, my biggest concern with solar panels in Florida is the moment I install the solar panels in my house, a hurricane is just going to come and rip them off. But I'm not being a pessimist, I'm just being a realist, right? I mean, when you live in southern Florida, you get hurricanes, and if I have solar panels on my roof, those are gone, right? It's almost like a guarantee that those are gone. Dave says, if you are building a house, just include panels. They drastically reduce your bills when installed correctly in new construction, says Dave. Yeah, I mean, Dave, you may be right. I just haven't really done too much research on it. But look, again, to Dave's point, if solar panels will save me money, I would do it. I mean, why not? But I just don't know if that's the case. I would have to, you know, have somebody come to the house, price it out. But from what I understand, and maybe you guys could help me out with this, you know, sometimes if your solar panels generate enough power, can't you sell the power back to the grid if you don't have the battery capacity to store it on site? Now, I'm seeing a lot of mixed messages about solar panels. Keith says, Tom, solar panels weigh a good bit, and you must have the structure, rigidity to withstand the added stress. Yeah, I mean, my biggest concern is, you know, what if I get 115 mile an hour winds in a hurricane? It's going to rip the roof off my house. SME Media says, Tom, if you want to get solar panels, think about doing that after you get your roof replaced. Yeah, I mean, my electric bill is really low. I mean, it's literally like $50, so I don't even know if I would want to go through all the hassle to do it. I just don't know if the ROI would be worth it. All right, so we are now here in the heart of Times Square. We are right outside of 1 Times Square, right outside of the New York City Police Department. Jenny Trickett says the person could sell the electric back to the grid as well. Yeah, that's what I heard. Yeah, Momo says the electricity needs to go somewhere unless you could store it. And I think that's the biggest, and we've talked about all of this, ESG stuff and solar. Like, I think everybody is all for, a cleaner environment and all for solar. But until we have the battery technology to fundamentally store the energy, I think it's very ill-found perhaps to, demonize the oil and gas sector as much as we are. I think the time is going to come where we're going to have the battery capacity to store all of the energy. But until then, it's not going to be sunny every day. It's not going to be windy every day, right? So until we have the means to store this energy for a later date, I think maybe it's just a little bit ill-willed to, demonize oil and gas. Yeah, Nina says New York is super busy tonight considering the rain and cold.
I know.
It really is. I was walking around some of the notable restaurants near Columbus Circle, and I could tell you they were all packed, right? Consumers still are spending with force, let's just say that. You would never know that, we are going through one of the most significant crises ever, right? What happened today is, I tweeted something and it was kind of like a joke, but not really. I said, where were you when Silicon Valley Bank collapsed, right? Because it's significant. This is a major bank that failed, and this could have severe ramifications. All right, we're going to walk back up to Columbus Circle. So I have to get my stuff from the office. Hey, Sora says, hey Tom, how do you think this will affect, or how do you think this class will affect real estate broker and owners? So you're talking about like a real estate agent and real estate brokers? Well, I think, here's what I'll say. I think we're going to go through a very interesting time where a lot of people, especially real estate agents, are going to be flushed out of their job. And I don't say that in a mean way. I'm saying that because I think there's a lot of agents out there that are only accustomed to selling real estate in an environment of ZIRP, which is zero interest rate policy, right? And I think that there's a lot of real estate agents out there that don't have a really good grasp on the real estate industry. And I'm not saying that to be mean. There's some great real estate agents, there's some freaking killers, but as with anything, you have the Pareto principle where, 20% of the agents account for 80% of the sales. And I really think that 20% of the agents are really only worth working with, right? I think a lot of the other people, some real estate agents that I know, that I've worked with, I don't know them personally, they don't even know what a bond is. They don't know how interest rates affect the market, and it's really scary. And I think it's because the barrier to entry to get your real estate license is so low. But I'm not trying to be mean or anything like that, but I think there's going to be a huge opportunity, and I mean absolutely earth-shaking. I'm talking about like once in a millennia opportunity for those real estate agents and real estate brokers that are in understanding of the macroeconomy, that understand fixed income, that really understand the bond market and can add value to their clients, if they can dig their heels in the sand and continue to stay in front of customers to help customers find and help clients find off-market deals with higher cap rates, they are going to be rewarded like you would not even believe in 3 to 5 years from now. But I think a lot of real estate agents and a lot of real estate brokers are not prepared for the crazy slowdown in real estate that we're already seeing, right? So we talked about sales transactions have pretty much ground to a halt. You look at the National Association of Realtors releasing their existing home sales report, falling off a cliff, now declining 12 months in a row. I don't think they're prepared for the price declines that we're going to see. So if I had to give a piece of advice, I would say do the exact opposite of the majority of people in the industry. You're going to see a lot of people getting out of the real estate business. You're going to see a lot of real estate agents getting out of the business looking to do something else. I would lean all in. I would study. I would live, breathe, eat, sleep real estate. And you will be rewarded like you don't even believe. But you're going to need to stick it out, and you're going to need to stick through this next 2 to 3 year down cycle. But if you can do that, I can guarantee you are going to be rewarded. It's going to be like thunderous money you are going to make. But you need to know what you're doing. You need to be really well read up on the market, because here's the thing, guys, and we talked about this before. If you're pitching an investor to say, hey, I got this really good real estate investment, it has a 5% cap rate, 5 to 6% cap. Okay, well, the investor is going to be like, well, Tom, why would I buy this deal at a 5 to 6% cap rate when I could just go to Treasury Direct and buy a 1-year US Treasury that's going to yield me over 5% risk-free? I don't have to deal with tenants. I don't have to deal with the bullshit. I don't have to deal with the bull crap of fixing the property, the maintenance, the taxes, this and that and this and that, when I could get 5% risk-free. So that is going to stun a lot of agents that really don't understand the bond market and really don't understand how things work. There's still deals to be had out there in real estate, but I think they're off market. You got to be connected. You got to know how to get those deals, and you got to stay in the game. Okay? A lot of people, they only want to be involved when times are good. They only want to be involved and talk to clients and help out clients when they're making money. Right? There's an old saying, it's always funny when you're making money, but when you're not making money, things go the other way. The professionals, okay, the real professionals stay in the game when things are good. They stay in the game when things are bad. That is a rock star. That is a professional. That is what you need to be. All right, guys, I think on that note, my phone is going to die. Let me see one thing. Oh, hey, Andy's here. What's up, Andy? Good to see you. Welcome. Andy's joining us from South Korea. Now, this doesn't mean go out and buy real estate now. What the thing that I'm saying is you should be always shopping for deals, because we could get significant mispricing in the market, meaning prices could go a lot lower, right? And those people who are very well capitalized and well connected are going to get those deals. But you're only going to get those deals if you're in the game, right? So if you're a real estate agent and you sold $20 million worth of real estate last year, you had a good year, and now you're slamming your fist on the table, you're like, well, nobody's buying, the market sucks, I'm going to go do something else. You're not going to be rewarded. Yeah, Dan says, look where nobody's looking, for sure. Absolutely. Hey, Birdman is here. Good to see you, Birdman. Says nothing like long week's work and cracking a few beers and watching Walks from Wall Street. Well, I appreciate you being here. This is Junior's Cheesecake. Now, the original Junior's, for those maybe non-New Yorkers that don't know, I think was originally located outside of Atlantic Terminal, Brooklyn. I used to go to that one a lot. Back in the day, I actually used to take the train to Atlantic Terminal quite often, by the way. My dad used to work in the Brooklyn Navy Yard, so I would walk all the way up to Navy Street. Now, this was before the Navy Yard was really built up, right? Now the Navy Yard is really, really nice. They have a Wegmans there, there's local shops, but before it was, really just power plants and industrials. So, I don't know, maybe I'll take a trip to the Brooklyn Navy Yard soon. I haven't been there in a while. I haven't been there since I was a kid. Hey, UnitJ22 says, thank you, Tom, for a nice rainy Friday night. Have a good weekend. Thank you so much. Appreciate you. Yeah, if you guys are new here, feel free to subscribe to the channel. Leave a like on the video. Share the show with your friends. We do these live streams starting at 8:30. Now, Monday through Friday, we tend to talk about the financial markets, but the weekends we kind of just hang out. So Saturday, we hang out, we explore New York, we explore Miami, kind of hang out with the team. But Sundays are our Markets to Look Ahead live stream, where we cover in depth the events that will be happening in the week ahead on Wall Street. But I'll take you guys back up to Columbus Circle if the battery will last. Or maybe I'll cut you guys loose on 51st. But look, I think we had a good stream. I mean, man, did we cover a lot. And we got to see Grand Central Madison too, so it was a pretty good night. Even though it was raining like crazy. Still a beautiful night in New York, still a beautiful night in the greatest city in the United States. All right, I'll cut you guys loose here. I want to wish everybody a very happy, healthy, and prosperous weekend. Enjoy it after the week we've had. I mean, my God, was this a ridiculous, crazy week? We definitely need to rest up for what's in store for next week. We could be going into a full-blown financial crisis, but the good news is we'll cover it right here on Walks on Wall Street every night at 8:30. Tune in, my friends. Thank you so much for being here with us. Mike C., I appreciate you. Enjoy your weekend. SME Media, have a great weekend. The Investigator, the LT Prod, Paul Medes, Mohammed, thank you so much. Neil Bell, Marcelo Gil from Brazil, I appreciate you, sir. MBA Elias, thank you for all the great insights tonight as always. You really help out the stream, which I appreciate. David S., Turtle Sweetheart, thank you so much. Andy from South Korea, thank you so much, my friend. Enjoy your weekend. Bree Graham's got your Mario DM, thank you for being a great moderator. Steph UH, William Ed T, Dave, Abdullah, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. Yes, even in this environment there is. You just need to know where to look. See you guys tomorrow. Take care.